Hello, this is the Unemployed Value Degen, who is not giving financial advice. I'm sitting down with one of my former students, Mitch, who is
Hey, how's it going?
oh, thanks, Mitch. He's my expert on technical analysis, and I like to bring him in whenever he has the time to look at what's happening in the markets. How are you doing today, Mitch?
I'm doing good. Thanks for having me. How are you?
I'm very well, and it's always a pleasure. Thank you for coming. Um, let me so this last week, the 10-year Treasury has been heavily fought over. The last time I looked at the 10-year Treasury, it was at this little tiny peak here, and since then, it looked like, okay, are we about to start falling again? Nope, and it makes a newer high. And every time it does this, every time it makes this new high on the 10-year Treasury, the stock market crashes and it starts falling back, and then nope, newer high. And if I zoom out on this, this is the 5-year. And I did finally learn how to annotate this thing. So let me go ahead and annotate this. If this really is the peak for now, we'll make a little channel out of that. I think this is what, most of the major market participants think the next 2 years is supposed to look like as far as 10-year treasuries. Like, it's supposed to keep bouncing off this declining trend line until we get to maybe middle of 2026, when we have a chance at a 3% 10-year, and that would make a 5.5% 30-year mortgage, give or take. Or it could make a 5.5% 30-year mortgage. And I think that's what a lot of market participants are preparing and bracing for. And they could be wrong, but I think this is what a lot of smart people think is supposed to happen. What's your take on that, Mitch?
So, if you go back to that, I think it was the 1 month chart, it looks like the 10-year is almost not convinced that rates are continuing to come down.
Yeah.
And that's something that I've been cautious about for, since this 10-year's been rising. So,
Yeah. And
I would definitely keep an eye on it. I think there's less certainty in the market about rates continuing to come down, at least at the next Fed meeting. So
yeah.
I think this is something to be cautious about for sure. But the overarching pattern on the long-term chart does look like it's a downward trend, but I would be very careful about this making a new high and breaking out of this channel,
Yeah.
because it's not like a super well-defined chart or channel. I mean,
Yeah.
so yeah, this one's gonna, like you said, every time it hits the high mark, the stock market tanks.
Yeah.
So
Every time it
definitely,
makes a new high, people panic because this
right.
is what they think is supposed to happen, and then every time the 10-year is pushing up against this line and tries to break above it, they say, hey, that's not what's supposed to happen. So it's I mean, in the last few days, it's like a fight over inches every time the market's fighting over these 10-year treasuries. But yeah.
Yeah, but in a few months span where rates have come down 75 basis points, that's not usually the price action you want to see on the yields.
Yeah,
You don't want to see that going up.
the overnight rate. So I have this handy chart. This is since 1989, the cutting cycles, whereas when the Federal Reserve makes their first cut, what happens to the 10-year Treasury? And there were a couple of instances, 1995 and 1998, where the 10-year Treasury rose and didn't fall. But we've greatly exceeded all of those. So we're definitely in a historical outlier here. What's interesting about 1995 and 1998 is the Federal Reserve was not cutting because there was a recession. When there's a recession, people panic buy the bonds and it drives the yield down. So it's not totally new for interest rates on the 10-year to rise when the overnight rate is cut. But you see, they usually, a couple months out, have started falling back down again from the peak. And now we're 2 months
Right.
out, and we haven't quite started falling back down again. I think a lot of people are looking at this and just wondering. I mean, it's the same thing people are looking at this one for, is, hey, this peak is kind of scary, guys, you can, feel free to fall anytime. But it's in a world where people buy treasuries to protect themselves from a recession, and people become more and more convinced that there's no recession coming, it is kind of reasonable for them to sell bonds, which then drives the yield up. So people
Yeah, I
selling
agree with
bonds,
your take there. I don't think, especially now under Trump, I don't think there's really too much recession fear on the table.
yeah,
And bonds are just not attractive. Everybody knows that inflation is, here to stay,
yeah,
and a lot of the policies that Trump wants to enact are going to be inflationary. So bonds, I think that's just another aspect of the story is bonds are becoming less and less attractive in the current market.
yeah. Who wants to buy a 10-year treasury at 4 when trueflation is, clearly, hit the floor in September and is back up to 2.8%. And then you have now, I don't know for a fact that the things that Trump is going to do is genuinely going to be that inflation. I don't think anybody knows what Trump is going to do. I mean, you've got Elon Musk saying he's making the Department of Government Efficiency and he's going to cut $2 trillion from the budget. And I wish him well. I mean, that would be a historical anomaly. That would be, and who knows? I mean, I wouldn't want to. I wouldn't want to bet against Elon Musk. I mean, the guy's been more productive than I could be if you gave me 10 lifetimes. But for somebody to cut $2 trillion from the government budget, that would be as anomalous historically as George Washington at Newburgh refusing the chance to be king. I mean, that's really like a once in a history book event. And
Yeah.
I don't think anybody knows what that would look like. So, but yeah, I mean, when inflation's 2.8% just on the trueflation measure, who wants to buy a 10-year treasury at, I mean, even now it's 4.5. That's just not attractive. And then on top of that, you're going to have Federal Reserve policy. So, well, now in the very short term, this is really nitty gritty of fund flows. But we're about to hit the debt ceiling, and when the debt ceiling gets hit, the Treasury empties the Treasury general account, and that can lower interest rates in the short term. So we might very, very soon here have some interest rates falling on the 10-year just because the Treasury is entering the Treasury general account, and that could keep it bouncing in this channel, which would give a lot of relief to the stock market. But longer term, who knows? Because then you've got the Fed policy, you've got Jerome Powell, and there's a lot of things that's anybody's guess because we don't really know what any of this is going to look like.
Yeah, I think there's still a lot of uncertainty around, what
Yeah.
everything's gonna how it's all gonna play out.
Oh, and this was a great chart. So the futures market is projecting 10-year treasuries to rise, and Goldman Sachs is forecasting. Well, and actually, I mean, as far as pattern recognition, I'm not going to thumb my nose at Goldman Sachs forecast, but the important thing here is somebody is wrong and somebody with a lot of money is wrong. And if the futures market really is positioned for rising rates and they stop rising, that would be a lot of relief for the stock market when that gets priced out. But it just needs that little bit of momentum shift. It just has to start falling a little bit. I think a lot of things are going to change. And then you also have, there's a whole bunch of historical analysis on what happens around elections. And also what happens when the stock market is up 20% by the end of October. And of all the times in US history that the stock market was up 20% by the end of October, I think the average rate of return in November and December is another 4.5%. So it's just the momentum, the chasing. There's such good odds that the last 2 months of the stock market will be strong, but that hasn't been what's happening after this election. So this is the S&P 500, and I've got the chart the way you like it, with candlesticks, with the Bollinger Bands, and the RSI. And yeah, I mean, there's the bounce, the massive jump up on the Trump clean sweep, and it was pushing against the upper limit of that Bollinger Band, and then it crashed. And this is almost exactly a 50% retracement. And some of my other technical analysis people say that that's an important threshold. When you're at a 50% retracement on some sort of a move like that. I don't know what your take is, but this
Yeah.
is the S&P
So
500.
so I think, this chart is poised for a bounce, whether it's here at this the 20-day moving average, which is halfway between the Bollinger Bands, or if it's at the 50-day, has another 10 points down to go. But this is a strong upwards trend, and I don't think the Trump euphoria is over. I think it's been a little bit of a needed sell-off. The market was getting overbought. And whether it bounces here at 585 or if it's at 575, I think it looks like this is, going to keep moving forwards and upwards. The market just needs a little bit of relief, a little bit of good news, and then I think it's back to the races.
Yeah, and I think there's been a pattern. I don't know how many years this is going back, or if it's just more recently, but there's been a pattern of selling off on Friday and rallying on Monday, as people take money out of the stock market, so there's no geopolitical risk over the weekend.
Yep,
so
I was about to say de-risk over the weekend.
Yeah, so there's I think there's a pretty good chance we could bounce on Monday, but I've been tending to lean more optimistic recently, so I don't want to come across as Pollyanna, but I think there's good chances of a bounce there. Let's check out the NASDAQ, the QQQs, and it's a very similar chart. The only difference here is this July high that everybody's watching.
So this chart, the fact that it's gone, it ended under its 20-day, makes me think this might, and S&P might follow. It might bounce off the 50-day rather than the 20. Yeah. So the market might have a little bit further down to go this week before continuing, most likely to new highs. But overall, I'm feeling bullish.
Yeah. Well, and there's a lot of concern about a rotation out of tech and into everything else, right? Out of the semiconductors, out of the AI trade, and into the S&P 493. But having the NASDAQ below its July high, below its 20-day moving average, it's a different chart than the S&P 500. And then if you check out the Russell 2000, this thing, it's trading like a meme coin, but it kind of always does. But it's above the 20-day. It's kind of mirroring the S&P 500, where it's retraced exactly half of the Trump move. Last week was a painful week. I mean, just look at that cascading red from last week. That was
but
rough.
I mean, again, as aggressive as it went up, it came down, and it got super overbought, and it needed the pullback. And I would hope for a little bit of consolidation to keep moving back upwards. The same thing it did at this last peak. It ran up. It had that. Oh, I need to change the chart. But
yeah, I just wanted to check and see where we were in relation to. And so we're still above. It bounced off this line. What is that about? What is it? Right about 220. It bounced off that line a lot of times.
Holding above that line is going to be huge. It looks like a giant cup and handle pattern waiting to break out. So,
and it looks like it has broken out, because I'll go back to your 1 year. I didn't mean to cut you off and change the graph while you were talking.
No worries. But it's still holding above that 220 point. And back in August, where it had another huge run up, the same thing happened. It consolidated for a few days, then it crashed and continued bouncing and moving upwards. And I wouldn't be surprised if it's a similar sort of pattern after this drop.
Yeah. Well, let's go ahead and jump into some of the individual names. Let me see. So my number one thing that I have been accumulating aggressively, and I'm up to
FOA, baby.
8% of the portfolio, is Finance of America Corp. And it's
we're up to 8% now.
Yeah.
Nice.
We're up to 8% of the portfolio, partially because it tripled, and partially because I bought more. But it did give a little bit of relief. It had gone up, it rallied hard, fell back. I even tweeted on Twitter or X, whatever you call it, hey, knock it off. I want a better entry. The price is getting away from me. And then it did immediately fell to $17, and it's bounced back up again.
yeah, this is something super volatile that, you really can catch bounces. Even intraday, this thing has some wild volatility, but this still looks like it's very bullish to me. Um, so you've got the higher highs, obviously, and the fact that it didn't completely crash on that, on that sell off from 24. It's still
Yeah.
moving upwards. It's still at the top of its Bollinger Band, so I would still expect some intraday volatility, but the moving averages are getting pretty wide. Um, the the histogram on the MACD is still looking strong. It's not giving
Yeah.
anything back. So that's usually a good sign to continue the momentum. Um, yeah, if there is any sort of pullback, I agree that, it's time to keep accumulating this because at a market cap under 200 million,
Yeah.
it's worth so much more.
And management guided. So I had started a position and I thought I had plenty of time. I didn't think it was going to run away from me that fast. And then management got back to net income positive a lot faster than I thought they would. And they've now guided toward 2025 as to having, I think, 2.7 billion of volume on their mortgages, which is pretty close to average. They're back to 2025 being just an average year. And in an average year, they're net income positive, and then on top of that, so the bonds, as they mature and they keep the residuals that I've written about on my paywalled article on Substack, that starts showing up in book value about a year. So these mortgage-backed securities, they're callable after 3 years. They mature at year 5. About year 4, they actually have a residual book value, and that starts showing up in book value. And I think it went up by something like 150, 175 million dollars last quarter. And so the book value just increased by 175 million dollars in a quarter, and it's a 192 million dollar market cap company. And I don't think a lot of people understand this stock, but I think people understand momentum, and it's still crazy cheap. I mean, it's
Yeah, and if you zoom out on this chart, you go back further, I think it really tells the full story because this stock was, a nightmare
yeah,
for 3 years of interest rate increases, and wow, I haven't seen this chart, but it looks like it's back to that base it was forming in, early 2023. So
that's a good point.
this might be an area where it consolidates a bit.
Yeah, that might be
I mean,
that might be some resistance. So I haven't looked at that. I haven't seen it, but it could bounce off this a few times. This 2140, 2150 range. Absolutely, it could.
yeah. So, but fundamentally, I'm not at a point where I think the company is overvalued, even if the stock valuation maybe has gone up too fast. But
Yeah,
if there's any consolidation, I would just use that as an opportunity to buy more.
yeah. And I'm not terribly worried about the dips. I just want to get myself up to. I mean, it's already
It's
eight
just a
percent of the portfolio,
strong
but
change in momentum. You got that golden cross, and it's just starting to rip. I
yeah. Let me
think
go
this has
back to
so
the
much
1 year
to
because that
go.
shows the golden cross better. But yeah, the momentum has changed, right? It's no longer a stock in decline. The golden cross was middle of September. Um, so yeah, and as long as the volumes are up every quarter, it's just the accounting statements are so hard to get through because they do this crazy mortgage REIT accounting.
Yep.
But FOA, it's a good solid 8% of the portfolio. I really like it. Portillos had a sell-off, and it was a strange thing that happened where the
Oh wow.
so there was a bit of funky data on one of the consumer consumption. I'm saying this improperly, but one of the reports on consumer spending was extremely heavily seasonally adjusted. And if they used normal reporting, it would have showed that consumer spending was about 1% year over year bigger than last year. But because of the seasonal adjustment, it made it look like consumer spending was, falling off a cliff. And so, and also, I don't know if they've announced earnings or anything, but this is a pretty big drawdown for Portillos. Um, but I know in the past you've said you love buying things that are rising when they're below their 200-day. But I don't know
Yeah.
if this sell-off is enough to make you more worried than that.
No, I'm not, I mean, it fell below the support that it previously had in, September, where it was consolidating. So while that might be a little worrisome, the fact that the RSI has hit 30 is more, bullish to me than anything. And, sometimes stocks will, quickly dip below their support or, a moving average and then bounce back. And usually that ends up being one of the better buying opportunities.
So
Now,
this
I
might be a
maybe
really
would
good
hold
short
off.
term. Oh, sorry, Mitch. Go ahead.
Yeah, so the selling pressure, looking at the the histogram, is just increasing still. There's kind of no no slowdown there, so it might have another day or two of consolidating before, it pops back up. But this is something I definitely have an eye on. I mean, if it does fall further, it looks like maybe about 10.5 is probably the limit of how far it could fall. But yeah, this is a stock I like. Like you said, it sounds like an overreaction to seasonal data, and yeah, this is something I would buy at this price. I wouldn't be too concerned, even though this is a pretty massive sell-off. That's like
Yeah.
6 or 7 days of red in a row.
Yeah.
It if the market ends up eventually catching a bounce, I'm sure this will bounce with it.
Well, it's fallen for all of November. It didn't even catch a bounce with the election, which is kind of bizarre. And also earnings. So earnings were on the 5th of November. I don't know if I've reviewed them yet for the Substack. Portillos, it can handle a lot more weight in the portfolio, so it might be something that I want to start adding to at this price. Um, but
Yeah,
yeah,
I would be comfortable adding to it at this price. This seems like a bargain to me because I mean you still got the moving averages, and a golden cross, and RSI is really, the biggest
yeah,
proponent of that. At 30, it could get a little more oversold before it bounces. So maybe
yeah,
watch what the market does on Monday and Tuesday. But yeah, this is something I would feel comfortable adding.
yeah. And I might see if I have reviewed that earnings call. I don't remember because I've reviewed so many earnings call this season, but I might review that earnings call. This chart is really handy. It has a lot of really useful information here, but I think I might review that earnings call and see if there's any really ugly surprises or if they're temporary. But I think this is something I want to add to. Um, Let me also look at next up. We'll go with Doug.
Yeah, that's making some nice consolidation. So it looks like since July, it's been in this upwards trend, but it's coming down a little bit. But I think that's more so since that run up, a factor of the what the 10 year is doing,
Yeah,
So it might consolidate in this range. You see the moving averages did make the golden cross, but they're staying pretty tight still, right?
okay.
So I wouldn't be surprised if it dips below the 200, and I would buy it below the 200. But there's also potential for it to stay up and keep bouncing from here. It really could go either way. There's no significant inflection that I see. The RSI is pretty middle of the road. Um, so yeah, this kind of seems more like an interest rate dependent play
Yeah,
rather than anything else.
yeah, and so many of the small caps are interest rate sensitive, but this one's just extra interest rate sensitive. Um,
Right. I mean, real estate always will be.
yeah.
So,
Let me check out your biotech.
oh my God, they fell on amazing earning. Well, I mean, the earnings themselves weren't great, but they came out with like all this partnership information. this is something I would buy with both hands right now, especially while it's in this uptrend that it consistently keeps bouncing from its 50-day. This seems like a buying opportunity we haven't had since, September. So, yeah, I would buy some more SPRY. Everything fundamentally is going according to plan, better than, I think anyone could have expected even. So the fact that this isn't higher, um, I think they have, so something, that a data point that came out was that they sent out a whole bunch of their Neffy 2 packs to I can't remember where, but as like a relief thing, and that was a point that more there could be a lot of bulk orders from like governments and stuff
Yeah.
in the future, and because it has a longer shelf life and it's a lot easier to apply. I think this could really become, dominant in the market.
Well, that was a big part of their marketing strategy. This management team with they had the opioid overdose drug. It's like Naxalone or however you pronounce it. But I mean, the primary customer for that is governments because they keep those things in ambulances. Um, so yeah, it wouldn't surprise me. And another thing you were saying is that uh, customers are not only I mean, customers are replacing their EpiPens. They're having a nasal spray in addition to the EpiPens. They're
Yep.
not even throwing the old ones away. They want to have both on them, which is kind of interesting. So
Right.
I think they could grow pretty aggressively.
I agree. And it was interesting. People are buying more, doubles and triples rather than singles, which just shows, people are stocking up on this because it has the shelf life too.
Yeah,
People were concerned that shelf life was going to take away from sales, but I think in their case, that's, the benefit of their product is the shelf life.
yeah. And so I guess I was listening to management, and for the anaphylactic shock, you're supposed to have 2 doses because sometimes 1 dose isn't enough. And with the cost and the shelf life of the EpiPen, a lot of people weren't keeping 2 doses, and maybe with the nasal spray they will. And also, there was a staggering number of people who are completely useless in an emergency. That the percentage of the time that somebody's going into anaphylactic shock, they have the EpiPen, and they don't use it because they're just worthless in an emergency. It was a
Right, and
shocking,
there's
shocking
complications
number.
from if you don't apply it correctly,
Yeah,
which isn't really the same issue with Neffy.
yeah. So you take the number of people who don't even use the EpiPen because they're afraid of using a needle. And you take the number of people that accidentally stab the kid in the bone and have a complication. And you take the number of people that accidentally stab themselves in the hand while they're trying to give it to the kid. It's just a shocking amount of misuse for the syringes because people panic and they're totally hysterical and worthless in an emergency. I didn't realize just how often EpiPens were misused or not used at all. And this nasal spray it completely overcomes that problem. I was just shocked listening to the numbers on that.
Yeah, I agree. It really has all the components to take over this market.
Yeah.
Not too much competition. A great management team. I think this is something I would be buying right now.
If you had a little bit of money to spend next week, would you buy Ars Pharmaceutical or Portillos?
That's a good question. I think I have more conviction that SPRY would bounce, just based on the strength of the 50-day moving average for this. That's where my marginal dollar would go.
Yeah. See, as a value investor, the fact that Portillos fell more makes me interested, but the technicals are less indicative that it will bounce faster. So the value investor in me says, "Oh, that's a bargain," but it could easily fall more. Whereas
Yeah, right. And that's if I only had to choose one. I think, I could definitely justify, you know, maybe a 60-40 split, since I'm a
yeah,
little more confident in SPRY's technicals, but
yeah,
I could definitely get behind adding to both.
Yeah, why not both? So this is
Oh, but Opto's had an insane run.
yeah. I ended up selling a calls at a strike price of 30 when on this run. Because for one thing, my position had doubled, and I was willing to let it go. And for another thing, I had a suspicion that after a gap that strong, there would be a consolidation period. So we'll see if I can make it to December 20th without this thing climbing over 30 and getting called away from me, which it might, but I'm comfortable with that. And it's not my whole
So
position.
yeah, what I'm seeing right here though is continued strength, right? So you have this strong uptrend. You're above the double top, and I remember, uh, when that the gap up was happening from earnings. Once it passed 22, or it was 23, I think actually. I was telling you that was the point to watch for, and it just kept going up and up all the way to 28, and now it's way overbought, but it's been consolidating. I would expect a few more days of consolidation, maybe even downwards, but that RSI is cooling off. Um, I You got the Golden Cross. I mean, it may continue to sell off, but I think this has some strength and it could keep going.
Yeah, I think that's fair. Sometimes I'm a little too quick to sell covered calls, um, but we'll see if it pays off for me. Yeah, I mean the story is good, the product is good. The artificial intelligence build out is a 10-year story. Um,
Right.
so there's
So
definitely
while
some
a
legs
lot
to
of
it.
the other beneficiaries of AI, already had, even bigger run-ups than this thing was in the dumps.
Yeah.
So, I wouldn't want to stand in front of this freight train.
Oh yeah, I wouldn't short it by any stretch. But we'll see if I can get out of my December call and keep my stock. Actually, I think I could already go ahead and sell that call at a bit of a profit right now. But anyway, I'll
Yeah,
have to reevaluate it.
I wouldn't be surprised if you could get, a little sweeter of a deal, but I wouldn't feel too confident selling calls at this range.
Yeah, very very fair, very fair. Growth stocks are they're new to me. Um,
Yeah, and growth stocks move different than the value stocks. Yeah, and that's
yeah.
always something to consider.
Okay, let's take a look at your SoFi.
Oh, SoFi's been on a tear also.
Yeah, with a little bit of a consolidation.
Yeah. I mean that's such a crazy run up. Gone from $6 to 14 in a few months.
Yeah, yeah,
Um, so it's still looking oversold and overbought, but you're getting a lot more distance between the moving averages. But you're at the top of its Bollinger Band. I wouldn't be surprised if this caught a little bit of a sell off, just because I've seen how SoFi trades over the years. When it gets too high at the top of its Bollinger Band, this thing is volatile. So I think there will be better buying opportunities right now. Long term, I wouldn't sell this stock, until it's at least $20.
yeah.
You know,
Long term.
but in the short term, I think I would expect some more volatility. And something moves like this, I would look for maybe an entrance at the 20, which is halfway between the Bollinger Band. Which, if you look at this run up, it has kind of bounced up and down on between the top and the middle. So if this is to continue its rally, I would maybe look for an entry around $12.
Okay. So if it falls from here, it might not fall much below 12.
Yeah. Uh, but it did have a big gap up from 13 to 15, and it might hold the bottom of that gap up, and it could just consolidate here in the mid 13s. I'm not saying it necessarily is going to fall, but if you keep an eye, if it continues to consolidate here, the 20 will get pushed up. So maybe the 20-day in a week or two will be at 12 and a half or 13. So I wouldn't I'm not necessarily, itching to buy at this point, but I'm not a seller either.
Okay. Let me go with. Do you want to keep looking at some of these small cap tech names, or do you want to start going into the commodities?
I'm enjoying the small cap tech. I feel like, we spend a whole lot of time talking about, energy, which is still in the toilet.
Yeah.
But and uranium has started to move adversely. Wow, this yeah, Cardlytics. It looked like it had a breakout coming, but
Yeah.
this sell off is pretty brutal.
Yeah. It looked like it was breaking out, and then it crashed right back down. Um,
Yeah, but I mean, where it's sitting right now is, the bottom of the Bollinger Band, below the 50. So if you believe in the rally, you believe in the company, maybe this is a good time to buy it.
yeah. This is a company that it's in the same category as Open Door. That if they just execute well, it has the potential to be a 50 bagger. And not all stocks have the potential to be a 50 bagger, but they've carved out this niche where it would be a monopoly position on a big market. But they've been building it. It's very similar to Open Door. I mean, they've been building it for 10 years, and the market's saying, okay, show me the money. Where are the profits from this niche you've carved out for 10 years? And it's almost exact same position as Open Door, where it easily could, but it's really just a matter of management executing and making it happen. But there's so
Yeah,
few
I
things
mean,
I
with
find that
that
could.
long-term belief, you would like to buy at a good price, and this, doesn't seem like a bad price as long, it's continuing to hold this floor around, 325, 330, so as long as that floor holds and, the fundamentals hold up, I wouldn't, this isn't my top chart I would buy because, it's still in a pretty bad downtrend,
Yeah.
but I wouldn't, be against buying it. And
And then
this
there's
just
Open Door.
looks terrible still. Yeah, you got the lower highs and lower lows, failed breakouts. This is something I wouldn't touch with a 10-foot pole.
All right, I gotcha. Um, Burford Capital. This is another position that when I fill my FOA position, I might want to start accumulating a lot more Burford Capital. It's just every
So
time
this
I.
looks like it's slowly starting to come up. You've got the
Yeah.
higher highs and lows since that, August bottom.
Yeah,
Um, the
something like
failed
that.
breakout over 14 is a little concerning because that's a pretty major resistance point, it looks like. And the fact that it, fell all the way back down.
Yeah.
Um, yeah, I wouldn't say this is, something that's moving fast and breaking out right away. But, if you just accumulate at the bottom of its Bollinger Band, it looks like it's on a slow uptrend,
Yeah.
and this
I'll
could be the
agree with
bottom of
that.
the channel.
What's so interesting about it is it's due to receive just massive amounts of money, but it's such an unknown time frame, and I think that people just have a hard time. Um, People just have a hard time modeling it because the money, you never know when it's going to arrive. And the big
Right.
one,
What was that company that had that crypto exposure that you liked?
oh yeah, so there was two of them, but one of them is this one, FRMO, and it's so illiquid, and the price moves very infrequently, but it has been on a nice little rally, and
Yeah.
the guy that runs it, Murray Stahl, he's a very interesting kind of a venerable value investor because he's 2/3 into this extremely conservative royalty companies, and 1/3 into altcoins, and it makes it's like the most extreme barbell you can ever imagine, with like Texas Pacific Land being one of the most conservative kind of royalty companies, and then altcoin mining. He's mining, I think, Litecoin, and it's just blows my mind when somebody who's been a value investor for decades starts, just starts telling you about altcoin crypto strategy. It's just a fascinating earnings calls to listen to, and I'm just always mesmerized by it. But yeah, it's I think it's trading almost exactly at fair value to the assets, maybe a tiny premium, but not much.
Yeah, I would, I'm not surprised it's been following the crypto markets bounce. Um, it looks like a good uptrend to me, but pretty low liquidity, like you were saying.
Yeah, this is almost no volume that ever changes hands. But
But
this is,
I do like, crypto under this the new Trump board. So
yeah. Well, this is what I'm saying. I don't think people understand what Trump 2.0 is going to look like, because Trump 1.0 was aligned with conservative Republicans, and Trump 2.0 is aligned with Silicon Valley and populism. And it's a very weird marriage of convenience, because Silicon Valley, they want to keep their savings in crypto. And this is going to be an extremely crypto friendly administration. I mean, the applause and the cheers that he got from the crowd when he said, "I'm going to fire Gary Gensler," and the crowd erupted.
yep.
Like, he was shocked. And Trump, he's, if anything else, he's like one of these, you know, Roman Caesars that just wants to please the crowd. So having the crowd erupt at firing Gary Gensler, I think, is a big deal.
Yeah, no, I agree because Gensler was, holding back a lot of legislation that would be, good for crypto. So I would keep an eye on it. I'm not, super compelled to buy this after it's gone up from 7 to 9, but I think it's a good story and it's a interesting, inflation hedge. But at that point, if you're looking for the benefit of crypto, you might just be better off buying yourself some Bitcoin, you
Yeah.
know?
Well, let's take a quick pick. Let's at least get into some of the commodity stocks.
Yeah,
Um,
sure.
so I've been looking at this chart for Equinox, and it's had a huge change in the pattern since the last time we spoke. I mean, it's crashed pretty hard, and what's amazing about it is the gold price has come down off of 2,700, but it's come down into a range where they're still going to be gushing massive amounts of cash. I mean, all the miners will be, unless you're predicting the gold price falling back to 2,000 an ounce. And I don't think Trump being in office is going to deter central banks globally from accumulating more gold. I mean,
I agree.
he might
Yeah,
make a strong dollar, but he's not. I don't think Trump alone for 4 years can turn the dollar back into a desirable reserve currency, because other countries are going to be asking themselves, well, okay, who's going to be the president after Trump, and are they going to seize our savings the way they did to Russia? So I don't see the price of gold falling that much, but I saw the price of the gold miners fall, as if the price of gold is going to fall.
So this chart's kind of a mixed bag for me. I think more sideways up and down the channel is probably what you're going to see. So you've got, on one hand, you do have the higher lows from the March bottom, right? But since the April top, it hasn't been able to crack that, right? I mean, from so since the August bottom, it started hitting some higher highs and lows, but then it broke that September low. So that's a little concerning. This isn't, a breakout by any means or like a super bullish chart. I think it's going to continue to move sideways.
Yeah, it has the higher lows, but it doesn't have the higher highs.
Right. So
But
this is
it's
not, to me, a super actionable chart. And the way that the moving averages are kind of just moving along. They're not making much of a change.
yeah,
That it's not exciting me. Even
yeah,
though I think gold will be fine as long as there's inflation. Gold goes up. You know,
yeah.
they're going to be profitable, but
Well, what's
it's
important is
not
that
something.
so when there's inflation, gold as a commodity goes up, but if the cost of mining goes up along with it, the miners don't necessarily go up. What's been different about this rally is the all-in sustaining cost of the gold that this company was mining. So before they opened their Greenstone mine, it was right around $2,000 an ounce, and gold was at $1,900 an ounce. And then the Greenstone mine that they opened, their all-in sustaining cost there is supposed to be $900 an ounce for this new world-class deposit that they opened up. And their Mexican and Brazil mines, they're still $2,000 an ounce, but then gold was $2,700, and now gold is closer to $2,500. So if they're still making $500 an ounce in Mexico and Brazil, that's a lot of cash flow. So, but if gold falls back to 2,000 or 2,100 or something like that, but that wedge between what gold was selling for and the miners' costs, that was central banks buying, and it's already gotten to. J.P. Morgan put out a report that said gold is now up to 15% of central bank holdings globally, and that's a huge change. I think it bottomed out at something like 6 or 7%, and then you might have to be a bit of a doomer to think that gold is going to become 50 or 75% of global central bank reserves. But it was that way in the 40s and 50s and 60s. Are we really going to head back to a world like the 40s and 50s and 60s where gold is 2/3 of central bank reserves? I mean, it's possible because nobody trusts the other governments, and gold is money for a world without trust. But it's already 15%. I don't know what the ceiling is going to be on central bank gold reserves.
Yeah, I agree that you'd have to be extreme doomer to think it would get back to those levels, but I think it could increase. We'll see what happens. A strong dollar could impact that, but we'll see. But I think the commodity price of gold is just going to continue to elevate, so that should benefit them with their low all-in sustaining cost at the new mine.
Yeah. Well, I don't know how gold is going to do for all of 2025, because it could spend a year going sideways. It could retrench. But yeah, just thinking about the multipolar world where you've got the BRICS versus NATO, and the lack of trust there, and also the European Union, the euro, was making something like 1/3 of international transactions, and it fell to, I'm barely remembering these numbers, but the euro went from 1/3 of international transactions to something like 12%. It was just shocking how the euro has declined so fast as a reserve currency. And in fact, the dollar even strengthened during that time because it took some market share from the euro, and gold took even more from the euro. So people that were predicting the decline of the dollar as a reserve currency, there was a lot of grave dancing because it was showing, no, the dollar was increasing its share of reserve currency, but at the expense of the euro. But that still didn't fundamentally solve the problem that the United States seized Russian central bank assets, and the BRICS doesn't trust the U.S. anymore. So I don't know. I still see a world for gold to increase in central bank reserves. But on top of that, I think the bigger thesis is at some point the financial advisors pursuing a 60/40 portfolio, when they see that stocks and bonds aren't negatively correlated, they are going to have to start adding energy and gold to get the negative correlation to stocks. And that's a 10-year process of that learning curve and that change. That's
I think
10
some
years.
major changes are going to have to happen for, financial advisors to start doing that. But I agree with, the idea that, they're going to need to replace that negative correlation. But I think people, especially, the older generations, are going to be slower to, want any sort of change like that. So it might be, with the, once the younger generations start having financial advisors, maybe that's when that change starts to kick in. But yeah, I think we're a ways away from that. But there's another chart I want to look at, REG.
Oh, yeah.
So there's something interesting I noticed on REG. So it had that double bottom at, 3 and some change, right? And it bounced up pretty hard above the 50 day, and now it's come back down a little bit. I'm really interested to see where it goes from here, because if it could continue to hold above the 50, it might start making an upwards rally. But if it falls again, I would expect it to fall back to that,
Yeah.
that bottom.
Yeah, this 389 floor is the resistance.
Hmm.
If the 50-day isn't resistance.
Right. And the fact that it's, kind of sitting under the 50-day, didn't bounce right back to being above it, that doesn't make me the most confident in it. But I would look out to see if, rig can sustain stock price above that.
Yeah.
That would be bullish in the ways of, potential recovery. But I think the macro environment for drillers is just got a really bad sentiment right now.
Well, it's interesting because I mean, Rig has this $9 billion backlog, and aside from their three cold stacked rigs, they have very little white space for 2025. And last quarter they flipped to, I think, free cash flow positive by a big chunk. So it's in a great position to do better and better. And the capex, so the offshore capex of the super majors, because they have to plan this stuff years in advance, it's about to double in 2026. And the contracts for spending in 2026 are going to land in the middle of 2025. So we might be, 2 quarters away from starting to get announcements for major contracts and for having contract day rates rising again. But yeah,
Yeah. So
it
this
could
is
be.
something I would definitely keep on the watch list for, buying again. I'm not necessarily, convinced to buy here,
Yeah.
but it's something that, when the turnaround does happen, this is something I want to be buying.
Yeah, my problem is I bought too much when it was more expensive, and now it's a full position. This is I really can't buy anymore. I think it's over 8% of the portfolio, and it's not like Finance of America where I just want to bring that up to 10 or 15. This is as full of a position as it can be. But I like pairing it with ACDC, which, by the way, and I don't know how real these are, but there are rumors that the management team wants to take it private, which would be unfortunate and just a major kick in the nuts. Um,
Yeah.
and this
I,
is
I could see it with the way they've got all that vertical integration.
Oh yeah, I mean it's a super valuable company. Taking private is would be a smart move. Um, it would just be very painful for me. Um,
Yeah. But the PE firm doesn't care about the shareholders.
yeah.
So,
Well, it's not even the PE firm; it's the CEO and the president's uncles. So the previous generation founded a company and sold it for $3 billion, and they own together, the two uncles, about 75% of this company anyway. So it wouldn't take a whole lot for them to buy out the other 25%.
mm,
Usually, one of the main reasons why you want to stay public is because being public facilitates acquisitions. It gives you better access to the debt markets. You could issue bonds because you've already got your accounting statements on file with the Securities and Exchange Commission. They can be analyzed by the bond ratings agencies. But if they've finished their acquisition spree, if they have no more acquisitions left to do, then they don't have a reason to stay public anymore. And my original thesis is that they want to stay public because they have more acquisitions to do. And the only reason why they'd go public or private now is if this last acquisition, this chemicals company, I think it was, I forget the name of it, but it was in Midland, Texas. It was a direct competitor, but also with more vertical integration on the chemical space. Because when you pump the sand in for fracking, it also has a thickening agent, so the sand goes further into the cracks. So they've now added that to their competency, is the chemicals portion of that. So anyway, I hope they don't go private. This stock has been just chopping around in a ridiculous way. I
yeah, this is something I wouldn't really be looking to buy right now. So the worst sign to me is that double top it created on the 200 failing to, yeah, right there, failed to break through. And if you look even to the last two run-ups, it failed to break above the and hold above the 200 for quite some time.
Yeah.
So this is not something I would be jumping to buy. I mean, it does seem to bounce whenever its RSI gets too low, but you're still a ways away from that. So, and you've got, lower highs, lower lows.
Yeah.
It looks like a sustained downtrend to me.
Yeah. On the fundamental side of things, though, it was kind of interesting. They did talk about increased activity in the Haynesville Basin, and that surprised me because the Haynesville is pure natural gas. And I did it's not technical analysis the way you're looking at charts, but one of the things to look at is stocks that are green when the overall market has a sell-off. And Blackstone Minerals and Panhandle Resources were green on, I think it was Monday, Tuesday, Wednesday, when there was this big sell-off across the market. So that the Haynesville-focused royalty companies were green when the market was red. And that surprised the heck out of me. And also the coal companies. Let me pull up Peabody Energy real quick. So I sold my Peabody Energy at about 29 something because it's just been so well behaved at falling back to just chopping in between these channels. And I know people were saying, oh, Trump is going to be good for coal, don't sell now. But I think I sold my Peabody Energy at 29 something. And I'll be looking to buy it when it's on the lower Bollinger Band again. But what's your take on this graph?
So it might not fall to that lower Bollinger Band if we truly are in an era where coal is going to do good under Trump, right?
Yeah.
So you got a pretty solid uptrend from September. It retraced back to higher highs and higher lows. You've got the golden cross. It's coming down. It's not oversold and overbought anymore. It might fall to that midpoint of 26.32, but I wouldn't necessarily expect it to fall back to 23.
Yeah.
I think if it did, that might be a sign that the rally's over. But yeah, this chart looks pretty good to me.
Yeah.
Yeah.
The only question is it going to bounce off of this long-term resistance line? Is it going to bounce off the 20-day? Is it going to bounce off the 50-day? But you don't think it'll bounce off the 200-day. You think these days are long gone.
Right. It does look like we're in a, formidable breakout here. It's just a question of when is this thing going to bounce again?
Yeah. What's the new floor to buy back in?
Right. And it hasn't really established that quite yet.
Okay, fair enough. I still don't feel bad about selling in the 29s. I feel pretty good about that.
No, I wouldn't feel bad. I think that was a good call.
Let's see. And then I'll put Warrior Met Coal because I think that's been a different story. Although it's just crashed back pretty hard. What do you think about Warrior Met Coal?
So it didn't nearly have quite the same breakout, and it looks like it might have, topped at 75-ish because that was some past resistance as well. But if it catches a bounce here at the 20-day, you might have a golden cross coming soon. So that would be something I'd maybe want to get ahead of. And it looks like it's sitting at the top of this last range. The resistance looks like it could turn into support here, right?
Yeah.
So this might be somewhere that I'd be interested in trying to catch a pop, but it also could continue to fall a little bit further, maybe hit the moving averages. It's a little hard to tell. It doesn't have the same breakout to new highs that Peabody had.
Yeah.
So I'm a little less convinced by this one.
Okay, what do you think of you want to look at the uranium stocks or no?
Yeah, sure.
So this one's given back a lot of that rally, but it's at an interesting...
This looks like a perfect buying point.
Yeah.
So you're sitting right at, it did get way overbought after an insane run up from 35 to 115, right? You got to imagine, nothing moves up forever. But now it's sitting at the 50-day support. It's cooled down a lot. The MACD doesn't necessarily show slowing selling pressure, but I think that, if this chart is going to continue this uptrend, this is probably where it's likely going to bounce.
Yeah. Let me compare that. So I don't have a position in this one, but this is, it's kind of funny. There's kind of two publicly traded uranium enrichment companies, although this one isn't actually enriching anything yet. But this is the one getting all the buzz on Twitter, is ASP Isotopes. It's really super hyped. And they're so many years away from producing anything, but it's just got an extreme amount of hype around it.
Yeah, whenever anything is getting a whole bunch of attention and buzz, that kind of, sets off my contrarian alarms.
Yeah.
And the fact that this didn't really behave the same way that LEU did, it had the same massive run up, but it's kind of just consolidated. It hasn't really fell. So, but it does have that golden cross. Yeah, I mean, I don't think this is as bad of a chart. But I think there's more potential for it to fall.
Okay. Check out, this is UEC.
Yeah, this looks a little more safe and sustainable of a rally compared to the other ones. It hasn't quite, quadrupled, like LEU, but it's building up some good consolidations since the run. Still above its moving averages. Golden cross. I don't mind.
Okay, so this is a bit of a safer buy. So LEU might be really a great buying opportunity. ASPI maybe has an air pocket to fall. Energy Fuels, UEC, Uranium Energy Corp, is, it's so-so. And then Energy Fuels
just hasn't had nearly the rally that anything else has.
Yeah.
And I think that's, largely attributed to the fact that they're not a pure play. They have so much going on in the rare earth space. And, I think, pure plays at the end of the day always beat out the conglomerates because you're just never going to fetch the same multiple. But, yeah, this doesn't, really give me any sort of, major breakout indications. It's got some pretty strong resistance at this 7 point.
Yeah.
So, I think best case scenario, you get some continued consolidation and, maybe there's a golden cross and it keeps moving. But I think at least just from a technical standpoint, this is going to require some, positive news, some sort of catalyst to make it, push higher.
Okay. And then my favorite conglomerate that doesn't love me back, my unrequited love, Sibanye-Stillwater.
Well, I actually think this probably wouldn't be, a terrible time to buy. It's at the bottom of its Bollinger Band. It probably could catch a bounce, but it's not really showing too good of a trend.
Yeah.
From September, it's got some higher highs and higher lows, so that could be positive. But looking back further to March, it's not so good. So,
well, they've been making money on gold recently. Let me check the platinum and palladium prices. So platinum,
taking a big hit.
Yeah, it's been trading around this range, kind of under 1,000, and then more important than platinum to them, because they have a higher blend of palladium than a lot of other miners because of the North American assets. Oh yeah, so this explains a lot. There was this kind of failed breakout on palladium prices, where it's gone from $900 to $1,200 and crashed back down. That's quite a slam on palladium prices. So that explains a lot of Sibanye-Stillwater's price action. So you're probably going to have to see the commodities break out. But if you get some interest rate relief along with Trump trying to bolster the U.S. car market, maybe by removing some emissions regulations on them. I think there's definitely some pent-up demand for automobiles. If you look at the fleet age in the country, the fleet age is gotten older just dramatically since COVID. I think we're up to, I want to say, 13 years old on the average automobile in the country. So if you get some interest rate relief along with some deregulation on the emission standards, if you get some bump up in car buying, the platinum and palladium for catalytic converters could have a run, but that could be a couple years out. In the
I'm
meantime,
interested to see something. Could you go to the Fred website? They have a chart on, like, call it automobile parts inflation.
Parts inflation?
Yeah, like
economic data series, consumer price index, motor vehicle parts and equipment.
So that's just let's go to a 1 year. That's a pretty long chart.
Yeah, about what's it? It's 2020. I mean, it's been flat since so the Fred chart I like to look at is Fred total automobile sales, and we're still, I think, a couple million cars below the pre-COVID number. Let me go to starting at the 2000s. You had this sustained kind of 18 million cars a year, and post-COVID we've been down here at like 15, 16 million cars a year. So we're about 2 million cars a year off of the pre-COVID number. And people that are smarter than me in the platinum and palladium space say that you'd have to be at 18 million cars a year for probably a year or two to burn through the pent-up platinum and palladium stockpiles. And that might be true, I don't know. But as a country, you've just become so much poorer in real terms with the COVID lockdowns and the inflation that people aren't buying cars like they used to. And then on top of that, the higher interest rates. So that drives my thesis for advanced auto parts.
Yeah, I was just going to say we should pull up that chart.
Now, not only did advanced auto parts rise while other things were falling, they had sort of a negative earnings announcement. I might even bring this in closer. So I think the 14th, November 14th, they had Friday was just such a bad day for everything. But on the 14th, they released earnings and they announced the closure of 700 stores, and the price rallied. So when a stock misses earnings and the price goes up, that's usually a strong indication that the worst is over and now is a good time to buy. But then Friday comes along and then everything sold off. But it was, for one thing, last week, this was one of the stocks that, while everything was red, Advanced Auto Parts was green for those 3 days when everything was red, and then it was bought on a bad earnings, and then it sold off on the Friday. But 2 out of 3 of those are really strong buy signals, and I'll zoom back out to your 1 year, but I wanted to get that information out there.
That's really interesting, and I agree that when the stock ends up rising on an earnings miss, that usually is something to look out for. But just as far as technicals, it looks really range bound down here, and I'd like to see it hold above the 50 before I have some sort of confidence that this rally is going to be sustained.
Yeah,
but I do like the fundamental thesis. I'm not quite sure how, closing 70 stores or however many it was.
700.
700. Yeah, that's a lot of stores.
It's a lot of stores.
But, I think it's an interesting thesis. The, automobile fleet age, it'll be interesting to see how this one pans out. And it's just so, if you zoom out, like, to the 5 year, it is so much cheaper than it pretty much ever has been.
Yeah.
Right. So
but it's also a smaller company now because they sold their wholesaling business. They're going to close 700 stores. But if they just get to any sort of reasonable margins in the business that's left, it should be a very reasonably valuable company.
Right. Like, I don't think it'll go back to the 200s, but around the 100, 110 range, kind of similar to, the Carvana story.
Yeah.
If this thing recovers and this thing doesn't go out of business, it's going to rip.
Yeah. Well, Carvana was a little more extreme because it had traded down to, like, I don't know, a market cap of 50 or 100 million on a business that had 8 billion in revenue. And my take on Advanced Auto Parts is that the CEO in charge has the right turnaround story, and he's willing to do the right things to make the company turn around. And if you look at AutoZone and O'Reilly, they don't have any advantage. Like, none of these companies have a moat. They're in the same business district in the city. Like, they're right next to each other. They're the same store. And because there's so many different makes and models of cars, no one store can carry all the parts. So there's room for all the stores. They're all in the same area, and they all do exactly the same thing. There's no reason why Advanced Auto Parts can't be on par with O'Reilly and AutoZone. And if they did, on those multiples, it would easily be a triple. And I haven't heard any convincing argument that O'Reilly and AutoZone have any technological advantage. There's anything that they're doing that Advanced Auto Parts can't do. And also, so the new CEO is the former head of Home Depot Logistics, and he came in to implement a hub and spoke distribution plan. And I did later find out that is what AutoZone and O'Reilly use, is the same hub and spoke distribution logistics program. So it seems like the new CEO came in to implement exactly what AutoZone and O'Reilly are doing. I don't see any obstacle to him getting back to something like O'Reilly and AutoZone's margins. So just fundamentally, I think the setup is there. And then fund flows wise, let me just go back down to this 3 month, because you can really see, I mean, this last week, everything was red. And you had the stock climbing Monday, Tuesday, Wednesday, announce bad earnings and closing 700 stores and rally really strongly on that news, but then everything sold off on Friday. And if I compare that with, say, the Russell 2000, you do not have a strong Monday, Tuesday, Wednesday, Thursday, Friday. Like, this is Advanced Auto Parts climbing while the small caps are crashing. So even though from a larger technical story things are not looking good, from a fund flows story, I think this is telling something important here.
Yeah, I agree. Well, I just about have to wrap up. So the stocks I like that I would be putting at the top of my marginal list, you got SPRY, I would dig into LEU, to be honest. I think that's going to be a big opportunity. And Portillos,
Okay.
that's where my marginal dollar would go in, as well as Finance of America.
Yeah.
But I think the charts for the other three are more compelling.
So marginal dollars for next week could split 4 ways: LEU, SPRY, Portillos, and FOA. I can get behind that. I can agree with that. Those are all strong buys for me. All right. Well, thank you very much for coming, Mitch. I really appreciate the time. And I really appreciate giving some not financial advice for people that should do their own due diligence. And I hope you have a great week.
Thanks for having me. Always a pleasure to come on. Have a great rest of your week.
Thanks. Bye, Mitch.